All right, good morning, everybody. Let's get started here. We're just running a couple of minutes late. If you guys can just quickly let me know if you can hear me okay and you can see the screen, that would be awesome. And then we're going to get started here in just a second. All right, perfect. Excellent. Okay, let's get started. Good morning, everybody. Serge Berger here from the steadytrader.com. If you're here for the first time, this is our Set the Market morning call. We're going to spend the next 10, 15 minutes or so going through the top things on my notebook. We are going to give you an update, very important update on gold. I mentioned it yesterday, what I did yesterday in gold. I have a further update on that. Then we're going to talk about some levels in equities. I want to talk about silver. I want to talk a little bit about Bitcoin. And then we're going to look at Tesla and what's going on there as well. So let's get started. Let me quickly flatten something here. Just flatten the futures position over there. Okay. All right. So what's going on in gold? So yesterday morning, I mentioned here in real time that I started hedging my gold position. Remember, none of this here is advice. It's purely educational. And what I mentioned here yesterday is that I'm staying long gold. Again, the Market Rover, our trend following tool, gave us a very clear entry point in around the mid part of 2023. At the latest, in early 2024, and gold is 70-80% from that point. You can see when the green background started printing. So we want to continue to respect those trends. That trend has absolutely not changed, but it is getting overbought. So our extreme overbought oversold indicator, the Vertical X Pro, now comes into play, which yesterday morning, and I mentioned this again real time here, if you guys are paying attention, hopefully over in trade ops as well, where we continue to talk about this in real time. We got an extreme overbought reading, and then on top of that, yesterday during the day, we get what's called an outside reversal day. It's just that's when you have the sort of the high and the low fully engulfing the previous day or the previous days, plural, price action. We had that classically yesterday, and this happened one day after the Vertical X Pro, again, our extreme overbought oversold indicator that tends to nail tops and bottoms printed. So if you don't have a process like that, you need to get a process. It's very, very important to have a process. Most people are struggling right now because after 15 years of a raging bull market where it was really not that hard to make money because you just buy dips, now you need a process. And you might need a process for the rest of your life, quite frankly, because the easy money is done. And so if you don't have a process like what you're showing you, you got to get with it. Otherwise, you need to stop trading and either don't invest or give you money to an investment advisor. In fact, frankly, your investing money should be an investment advisor anyway. But gold, it's overbought. So what I did yesterday, and I mentioned this here in real time because I did it before the market opened or the cash session opened, I started hedging basically all of my gold. I'm actually net short gold now. I'm just giving you this information for, educational purposes. I'm not short gold in the sense that I think gold is going to crash. It's just I'm like over hedging it, if you will. So I'm remaining gold, GLD, and other stuff that I have. But I hedged it basically with futures. One can do this with puts as well, of course, if that's what one feels more comfortable with. I did it with futures. That's just my thing. It's more efficient. But I'm actually over hedged it, meaning like on purpose. So I'm actually net short. So my short hedge is actually more than my long position in GLD. So this is not meant to be a recommendation, but I do think gold's overbought. I think we may have seen a blow off top here. I wouldn't be surprised if gold, I'm going to quickly bring up the chart of gold here. If we see a mean reversion move as much as 20% lower. I'm going to quickly show you the chart. So in terms of actual gold, basically, I wouldn't be surprised if we see a move down to, below 3,000. So, whether that's 15 or 20%, I don't know. But I think anything in that magnitude is fair game. So I'm just trying to teach you, and hopefully this is helpful. I don't know, maybe you guys don't care about this, but this is something that's in the headlines now. It's something that's a very important position of mine, and I know some of you are getting interested in gold. So, to me, that's important. What I wouldn't do, and this is important, if you are tracking this through a lens of an ETF, you need to stop doing that, right? Because gold, just like other, or let's say, like, for example, there's a lot of, ETFs that track gold or other commodities, or like Bitcoin, for example. You need to track the underlying asset. The underlying asset for gold is this, XAUUSD. That's actual spot gold, or track the futures. Don't track gold using the GLD. It's not the underlying. It's a derivative, right? It tracks gold, but it's not the thing you need to do technical analysis on. That's an important thing for everyone to understand. I see a lot of people trying to do technical analysis on like inverse ETFs, which is complete insanity, right? You need to do it on the actual underlying asset. So again, I think something around 3,000 or lower is possible. Again, it's not going to happen in a straight line. I wouldn't be surprised if we even retest the recent highs. That's possible. It's not sort of my thing, but I will show you. This is really important. So, one of my considerations for some of the client portfolios right now is actually to go inverse gold, and we have some portfolios where we can't do derivatives, or don't want to do derivatives. So there are tools out there, like, for example, an ETF like GLL. This is an inverse gold ETF. And so I'm going to quickly show you something here that's very interesting. So this tells me that there are some people out there, probably big players, that are hedging their gold exposure. And so GLL is an ETF that everyone has access to. And so it's the inverse of gold, right? So if gold goes up, GLL goes down. If gold goes down, like I think it might now for, a few weeks, maybe a few months, I don't know, then this goes up. If you look at the bottom, you see the volume. This is really, really interesting, right? So at the bottom, you can see that the average volume for this thing has probably been, maybe 1 million or so over the past, few months. Yesterday, this thing traded 25 million shares. So that is not a bunch of retail investors on what's that freak show called? Reddit boards, buying, hedging their gold. Like, that's probably a pretty decent player, a couple of hedge funds, something like that, maybe even a sovereign, I don't know, hedging some of their gold exposure. So, that's an important thing to notice. So from a near-term perspective, if one wants to not use derivatives and one wants to maybe hedge their gold, buying some GLL is interesting. I will tell you, it's pretty expensive. I think it's got like a 0.95%, so almost a 1% management fee. So just as an FYI, but there's a lot of ETFs that cost that much. That's on an annual basis. So if you hold it for a month, you're not going to pay 0.95%. You're going to pay, a 12th of that, right? That kind of thing. So most people don't even take that into consideration, but I'm just telling you for transparency purposes. So that's what's going on there. Now, the other question, and this is an internal debate that we're having right now, is what about silver? Now, there's a couple of things playing out here, and silver, the ETF for that is SLV. Just so you guys know, the silver ETF is SLV. And what's really interesting here, and I'm going to show you this using this chart, is that if you look at the past, let's say month or so, or even year to date, obviously gold, which is the purple line, has dramatically outperformed silver. So gold year to date is still up 26%. Silver is up 14%. But what's really interesting is that over the past few days, we've actually seen the price of silver actually outperform the price of gold. And I'm a little bit torn here. I really like the way silver's setting up because it's also an industrial commodity or metal. And I'm not quite sure if that positive correlation is going to hold true this time. I would venture to say that particularly if we were to get some positive news, something like silver could actually start to break out, maybe at the expense of gold. So watch this very closely over a 24-hour look back here. You can see that silver is actually up, not quite 1%. Gold is actually down about 2.3%. So that's just a little bit of information for you on that. So I thought that's really interesting. So that's an update on gold. If there's any questions on gold and silver, maybe no one cares because most of you actually don't own gold. We know that statistically. I would encourage everyone to start getting some, not advice, not now, maybe, but if we get it 10, 15, 20% lower, that would be interesting because the monetary debasing is not done and that's really just the beginning of it. But so the trends remain intact, but it's getting very short-term overbought. That's kind of what our my book looks like right now with this, which gets us to equities. So we'll just use the S&P 500 here for simple equity analysis purposes. This morning we are actually seeing the equity market, particularly the Nasdaq 100, gap up somewhere around. Actually, let's go to the SPY. Let me quickly see. So the S&P 500 is up somewhere around 2.8, 2.9, not quite 3% this morning. And so if you were to look at this on the SPY, we are looking to open here this morning somewhere around 540, call it 540. So that's somewhere, this is the daily chart now. Let me get rid of some of this noise here. So 540, that's actually somewhere around here, around there, right? So like there, where that little thing is. So there's actually not a whole lot more. We have a little bit more gappage we could possibly fill. So as far as the SPY is concerned, if we wanted to completely fully fill the gap down from April the 2nd or April 3rd, so basically the tariff day, right? Or the next morning, we probably after today's open have only another, and I say only, as relatively speaking, another 4 to 5% to go. So we could see the S&P rally up to 560, 570 in an overshoot. That's kind of our thinking right now. So that would get you back into sort of this zone up here. So, there is short squeezes that are very real. So I would be quite nervous being short here right now from like just a few days basis. I think if one has a multi-week view, like we've got some shorts open that have a multi-week view, maybe even a bit more than that, I'm not too concerned, but I probably wouldn't want to be caught short here in the very near term. Again, it's very fluid, but I'm just trying to give you some levels because we had a lot of questions overnight from people saying, hey, how far do you think a bounce could go if we have one? And my answer is that if we entirely fill the gap from April 3rd, again, it would get us roughly to around 560. On an overshoot, maybe it's 570. So, I don't think that's impossible. In fact, a lot of bear market rallies are very sharp. This would be somewhere between a 15 and 20% rally, which is really part of what can very realistically happen within the context of a bear market. So that's kind of what we see there. And again, any questions, folks, please feel free to ask. So that we address everything that needs to be addressed here. Last point, really from my perspective. So the third thing here is Tesla. So we talked about gold, talked about silver, we talked about the inverse for gold. I offered you guys what I'm doing on a near-term basis with gold. And the third thing is Tesla. So I know this is a name that's in a lot of people's minds all the time, and I get it. I'm telling you right now, from our perspective, Tesla this morning is set to open around 255. So just for perspective, 255 is like literally smack dab in the middle of that trading range. So, maybe there's some really quick trades to be done if you use momentum. I'm sure there's a trade or two that can be fired off, and we certainly will be looking at that in trade ops in our members area. But I think for the most part, the stock is just in a choppy range. So, until it is able to clear, from at the current moment above 290 or so on a closing basis, or even 300, or it drops below, the low end of the range to 218 or so, I don't think there's much to do. There's a lot of people that are getting very chopped up in here. People that are either perma-bulls on Tesla because they love it, or people that are just headline grabbers, or people that hate it that want to go short, right? It's an extremely, emotional stock, or a lot of emotions involved in that stock. So, to me, there's not a whole lot of high probability stuff taking place here, unless it's very short term, almost like intraday, in which case you want to use our TSD trender, or the trend ruler indicator for momentum to play that. So if there's no further questions, I'll leave it at this. I hope this is helpful. Quick 15 minutes here this morning. I'll see you guys over in trade ops in a few minutes. And at the top of the hour, we're doing day 3 of our boot camp, where we are going to bring the entire process together, and we'll really start kind of wrapping everything up in terms of the roadmap here for the next few months, and really for the next 6 to 12 months ahead. So hope it was helpful. See you guys back here tomorrow as well at 9 o'clock. Very important. Please give us a thumbs up, like. Please subscribe to the channel. Very, very important, so that you get updated in real time when we go live, and also so that we can continue to do this, because if we don't get enough subscribers, we will have to stop doing this morning call at some point in the not too distant future. Thanks for being here. See you guys soon, and be well.